Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Strategy Inc. quarterly report. Strategy Inc. offers a diverse range of businesses and services, including Bitcoin treasury management across the US, Europe, Middle East, Africa, and internationally securities such as equity and fixed income instruments for varying degrees of economic exposure to Bitcoin AI-powered enterprise analytics software. Plus Strategy One provides non-technical users with actionable insights for decision-making. Plus Strategy Mosaic offers consistent definitions and governance across data sources. The recent increase in MicroStrategy's stock price can be attributed to several key factors. Firstly, the company's continued accumulation of Bitcoin has contributed to its rising value, with purchases even made as recently as late October/early November 2025. Additionally, favorable tax guidance from the U.S. Treasury Department and IRS removed a significant financial uncertainty for MicroStrategy, leading to a stock price jump in October 2025. The company's strong third quarter 2025 financial results, which included a net income of $2.8 billion and diluted EPS of $8.42, also boosted investor confidence. Furthermore, the consolidation of its offering programs into a single omnibus sales agreement has streamlined administration and potentially improved market positioning. These factors combined have contributed to MicroStrategy's stock price increase of 8.82% to 15.22% over the past year. The primary drivers of revenue growth or decline can be summarized into several key areas. Revenue growth is primarily driven by the increase in digital assets, subscription services, and sales of preferred and common stock under public offerings. Specifically, the growth in subscription services revenue is attributed to conversions to cloud-based subscriptions and sales contracts with new customers. On the other hand, revenue decline is mainly due to digital asset impairment losses, decrease in product support revenue, and a decline in other services revenue. The shift from on-premise perpetual licenses to cloud subscriptions has also contributed to the decline in product support revenue. Overall, the growth in digital assets and subscription services has been the primary drivers of revenue growth, while the decline in product support revenue and impairment losses have led to revenue decline. Net income and profit margins experienced significant changes between 2024 and 2025. Net income increased by $9,084,351 for the year and $3.35 billion for the 9 months ended September 30, 2025. This growth can be attributed to an increase in unrealized gains on digital assets, such as Bitcoin, and a decrease in impairment losses on these assets. Profit margins also saw a substantial rise of 217.6% from 2024 to 2025. The effective tax rate for 2025 was 28%, compared to a -45.4% benefit from taxes in 2024. This change is largely due to the tax provision in 2025 resulting from the unrealized gain on digital assets, whereas in 2024, there was a tax benefit related to share-based compensation and deferred tax asset. The shift in net income and profit margins can be directly linked to the fluctuations in digital asset values and their corresponding impact on tax provisions. As these assets continue to evolve, companies must adapt to changing market conditions and regulatory environments to maintain profitability. Based on the financial summary, it appears that the company is struggling with its cash flow management. The key point to note is that the company is generating negative operating cash flow, which indicates that it is using more cash than it generates from its core business operations. This negative trend is further highlighted by the significant increase in net cash used in investing activities, as mentioned on page 73. This suggests that the company's investments and capital expenditures are outpacing its ability to generate cash from its operating activities. Overall, the data suggests that the company is not generating positive operating cash flow, which could be a concern for investors and stakeholders. The company's financial situation has undergone significant changes. The most notable change is a substantial increase in debt level, rising from $42 billion to $84 billion. This increase is accompanied by an 18% rise in interest expenses, totaling $8.4 million. However, the redemption or conversion of certain debt instruments may have mitigated this impact. Despite these changes, the exact effect on the company's financial health remains unclear due to a lack of detailed information. The financial performance of various segments and regions was mixed in the 3 and 9 months ended September 30, 2025. The EMEA region and US region performed well, with strong total revenues in both periods. In contrast, other regions underperformed compared to these two regions. Specifically, long-lived assets in other regions were significantly higher than those in the EMEA region, suggesting a potential issue with asset utilization or management in these areas. Management is optimistic about the company's outlook, expecting revenue growth to continue with a significant increase in total revenues by September 2025. They plan to accumulate Bitcoin through stock and fixed income issuances, viewing it as a long-term holding. However, they acknowledge the risks associated with this strategy, including market value fluctuations. To manage these risks, management intends to exclude unrealized gains and losses on Bitcoin holdings from their calculation of comprehensive income. They also anticipate using proceeds from equity or debt financings to meet short-term liquidity needs, and believe that substantial Bitcoin holdings can serve as a source of liquidity if necessary. Management's strategy is focused on accumulating and holding Bitcoin, with plans to increase total holdings through various issuances and atoms. They aim to maintain a stable stock price by adjusting the monthly regular dividend rate per annum on STRC stock. Overall, management is committed to navigating the risks associated with their Bitcoin strategy while driving revenue growth and maintaining liquidity. Acquisitions and divestitures overview. The company has made significant investments in digital assets, primarily Bitcoins, through various acquisitions. Key highlights include the purchase of 192,561 Bitcoins for the 9 months ended September 30, 2025, and a total of $19.38 billion worth of digital assets acquired during the same period. Notable individual purchases include 330,809 Bitcoin from Coinbase Custody Trust Company, LLC, and 223,278 Bitcoin from Anchorage Digital Bank, N.A. In terms of divestitures, the company has periodically sold Bitcoins for general corporate purposes or to generate tax benefits. However, specific details on the amount and timing of these sales are not provided in the summary. The company has a history of paying dividends to its shareholders, including on preferred stock, SDRF stock, SDRC stock, SDRD stock, and SDRK stock. The dividend payments for these stocks have been substantial, with total payments exceeding $197 million in the 9 months ended September 30, 2025. In addition to paying dividends, the company has also engaged in share buybacks through acquiring Bitcoin using proceeds from offerings of Class A common stock and various preferred stock instruments. This indicates that the company is committed to returning value to its shareholders through both dividend payments and strategic investments. That concludes the financial summary for Strategy Inc. Feel free to comment below, and I will be happy to answer them when possible.